All right, let's switch gears. Let's talk about Europe and what the big deal was about the summit that's still going on, or it was today at least. This is what the president of the European Council says.
We agreed on something new, which is a breakthrough, that the banks can be recapitalized directly in certain circumstances.
But what kind of breakthrough is that? Is that a good thing that there's a green light for direct bank bailouts in some cases, as they've agreed upon in Spain? Doesn't that just mean the debt is being shuffled around but not getting dealt with? What kind of a fix is that? Carl Denninger is going to tell us. He's trader and author of Leverage, How Cheap Money Will Destroy the World. And Carl Denninger, what was this big breakthrough and solution? Just buying Spain and Italy a little more time?
Yeah, pretty much. There's no breakthrough solution at all. I mean, you've got two facilities to do this with, the EFSF and the ESM, one of which doesn't have any money in it, or essentially none, and the other of which hasn't been ratified yet.
Right, not even in Germany.
Yeah, so there's no money in one, and there's not a lot of money in the other. And the best part of it is that major parts of the contributions to go into these funds are going to come from the nations that are in trouble and are going to allegedly be bailed out. So this is very much like me taking a $20 bill out of my left pocket and putting it in my right pocket and claiming I'm $20 richer. That doesn't work.
No, it doesn't work. But does it fool the markets for a little bit? And are we seeing a point of diminishing returns with these can-kicking efforts?
Well, sure. And this is a big announcement, so you got a big pop.
Today in the market.
Yeah, and so the market goes up and everybody cheers and everything's fine. Watch the bond rates over in Europe. They were down big today. All right, that's to be expected. But see how long they stay down, because what has happened is every time they come out with another one of these deals, we get, a few days, sometimes hours or minutes in a couple of cases, and then the market starts selling off again because people say, well, wait a minute, if I buy Spanish debt, how am I ever going to get paid? If all these guys are doing is shuffling money around, then at the end of the day, how are they going to pay me back? And what you have with Spain, Ireland, and Italy is a situation where all of these governments, despite the fact that they all claim, well, austerity, can't be done. The truth is that government cannot spend more than it takes in taxes, whether it's here or anywhere else. And when you do that, what you're effectively doing is destroying the purchasing power of everyone in the nation. So you can temporarily try to make up this black hole that you've created, but over time, how do you sustain an economy if the power to purchase things is being destroyed by everybody that's in the economy? Well, sooner or later you run out of money, right? And that's when it all comes apart.
Okay, and as far as the bond market, it seems like they need more and more of this drug of short-term fixes or short-term boosting confidence to get the same effect of not pushing Spain to unsustainable levels in their borrowing. As far as any kind of long-term fix about what you're talking about, which is the dynamic, that doesn't exist, does it?
No, there's been nothing that actually addresses the root cause of the problem, which is that the people in these nations, and here in America for that matter, need to have an honest conversation with their government. What services do you want government to provide to you? And then you have to pay taxes in order to cover all of those, not tomorrow, but in today's money. So that means that some part of the money you earn by going to work and doing your job has to go to the government to pay for these services. And if you're not willing to pay the taxes, then you don't get the services. That conversation is one that's very hard for politicians to have, because if you say to the Greeks, for example, fork up 25% of your income, or this particular program is going to go away, they say, well, we're not going to pay. And they have an underground economy and they evade paying, and then they cook the books to make it look like everything is okay when in fact it's not.
Well, I don't hear any of those conversations. I hear banking authority. I hear 120 billion euro for some kind of a growth program. I mean, even if these things are decided upon long term, are they solutions?
No, because what has happened is the banks have financed, in other words, brought forward the ability to have things today to be paid for tomorrow. But unless you can find a way to pay for them tomorrow, all that's happened is you've increased the total amount of debt, and no matter how low the interest rate is, you've increased the amount of interest you have to pay. Okay? So over time, this problem becomes worse. And this is why we continue to see the same dynamic play out. Yes, you get a little bit of relief, and then people start thinking about it and say, wait a minute, the debt is now, went from 62% to 72% of GDP or whatever it is. That means that the interest that's going to have to be paid is greater than it was a month ago. Why do we think that this should add confidence? This should subtract from confidence, and it does.
And why was oil up 9%, which we just saw today? Oil has been on a downward trajectory. Why did it shoot up today?
Because hot money loves somewhere to go that's speculative, and commodities are one of those places. And so when you have somebody that thinks that we're going to get currency debasement, which is essentially what borrowing more money is, then where do people go? They go into commodities. So you see moves in gold, you see moves in silver, you see moves in oil. And of course, the problem with moves in oil is that makes gas prices go up, which undoes this consumer flushness that you have, because now it costs more to fill your tank up to go to work in the morning.
And nobody likes that. No. And nobody is going to take a summer vacation if they can't afford the road trip, which you said you noticed on your road trip that you've been taking across the U.S. I appreciate you being on the show. That's all we have time for. Thanks so much, Carl Denninger, for being in studio. He's author and trader and a frequent guest from Florida. Thank you very much.